Hello students, welcome to all of you Shiksha 360 CAT classes. Today basically we have to cover the chapter number 11 of information and technology. Clear? That is regarding the plastic money. Clear? This chapter, that is chapter number 11, that is regarding the plastic money. This chapter basically we have to cover in 2 sessions, and definitely you will get 2 to 3 questions in the examination basically from this chapter, and you are also able to score marks from this topic. Clear? Easy topic, just you have to understand all the basic points regarding that. So now let's start our discussion. So plastic money, basically, as all of you know, that basically it is regarding the smart card, debit card. Okay. So all these things we have to be covered under the session. First of all, we will start with the credit card. After that, we will move towards the smart cards. Then we will move towards the rupee cards. Okay. All these things we have to be covered one by one here. So first of all, credit cards. So the traditional payment system with the money as the medium of settlement has been replaced by the checks and drafts, etc. Okay. So the traditional payment system, earlier basically we have cash in our hands and we do cash and purchase the things. Okay. So the traditional payment system with the money as the medium of settlement has been replaced by the checks and drafts. Further development in the field has been with the advent of the plastic cards. Clear? So later basically what will comes in the market, that is to be known as the plastic cards. So credit card, basically we can say that in the credit card what we have to do, we have to purchase the thing today and we have to pay the later. Clear? Buy now and pay later. So credit card, what is that? Credit card, it is the modern system of payment system which has to be large extent replaced the traditional forms of payment by cash, checks, etc. Okay. So what is credit card? Basically credit card, it is the modern system of payment system which has to be a large extent replaced the traditional forms of payment by cash, checks, etc. So Visa and MasterCard. So kindly remember that Visa and MasterCard are the association of banks which deals in the credit cards. Clear? So basically association, or basically we can say that which organizations basically are dealing with these cards, presently the Visa and MasterCards. Clear? You will see that earlier basically Visa and MasterCards only dealing with the credit cards. Now you will see that the rupee cards are also plays their important role in the case of credit card also. Clear? Earlier basically rupee card, you will see that only in the case of the debit card, but presently rupee card you also see in the case of the credit card. And there are a lot of offers, you will see that on the credit card, rupee credit card. Clear? Not credit card, we can say that basically rupee credit card also you will see a lot of offers. So further, so bank credit cards basically are a type of the consumer loan. Clear? It is a consumer loan. That's why we can say that buy now, pay later. Clear? So bank credit cards basically are a type of the consumer loan revolving in nature. Clear? Like basically it is like we can say that 40 to 45 day cycle. Basically after that your renewable limit basically will be renewed. Your limit will be renewed and you have to pay your expenses, whatever you have spent in the last 1 month. Okay. So bank credit cards are a type of the consumer loan that are resolving in nature. So automatically renewing itself within specific limits. The holder has the option to utilize it in part or full, depending upon his need. Like basically you have 50,000 limit of your credit card. So it depends upon you. Basically either you have to utilize full this or basically you have utilized part of that. So the credit basically so availed has to be paid within a period. Clear? The credit so availed has to be paid basically within a period, and with the repayment, the limit gets renewed automatically. And basically with the repayment, basically when you have done the repayment, the limits basically gets renewed automatically to be here. Clear? That is regarding basic information regarding the credit card. Now further. So what are the applications of the credit card? Clear? So the utility or the uses of a credit card, it is derived basically from its ability to buy the goods and services without actually paying for them immediately. So the process basically it is a continuous cycle involving the following steps. First one, the card holder basically makes purchase from the authorized merchants, producing his credit card and obtain the goods or services. Clear? First of all, basically what they have to do, they have to purchase from the credit card and they have to swipe at that place. Clear? So the card holder basically purchases from the authorized merchants, producing his credit card and obtain the goods to be here. Further, next one, the merchants submit a claim to the bank. Clear? So second one, that is the merchant basically submit a claim to the bank that I have swiped the credit card of that specific person and now I want the payment for that. So the bank basically makes payment to the merchant for the value of the goods and services sold. Clear? Further, what the bank will do, basically the bank makes payment to the merchant basically for the value of goods and services sold. Third one, the bank send notice to the customer to make payment for the goods and services purchased. Clear? Third one, what the bank will do, basically the bank send notice to the customer to make the payment of the goods and services to be purchased here. The card holder, clear, like you will get the monthly bill. Clear? You will get the monthly bill. Either you can say that basically by the courier. Presently these days, courier services, it is not to be used. You will get the details of the bill on your email ID. So the card holder basically makes payment to the bank. So this is to be a continuous process. Each of the above process now basically I will explain in details here. Like these are the goods. Goods are to be purchased by the card holder. So card holder basically purchase on the credit card and the credit card it is to be swiped by the merchant. Now what will do? Merchant basically submit the claim to the bank. Clear? Merchant basically submit the claim to the bank and bank basically will do the payment to the merchant. Now bank basically what they will do, bank basically send notice to the card holder and card holder basically makes payment to the bank. Clear? So this is the cycle. Clear? In the first phase, basically bank will do the payment on the behalf of their customer or basically on their client, that is basically the credit card holder. Later on, credit card holder basically makes payment to the bank. Clear? So the complete circle it is to be going on and completed in the end. This is the thing basically they are trying to say here. Now we have to move to the next point. Sale process using a credit card. Clear? Sale process basically using a credit card. This type of thing basically earlier prevailing in the market. Now basically you will see this type of thing rarely. Clear? Now there is no need of slip that. So sale process using a credit card. So the credit card basically are accepted by any merchant. Clear? The credit card basically are accepted by any merchant establishments which display a board. Clear? Basically which display a board stating that they accept a particular type of the card. Clear? Basically which display a board basically stating that they accept a particular type of the card. Once the card holder basically makes a purchase, clear? Basically once the card holder makes a purchase, the merchant basically accepts the card for payment. Clear? Basically once the card holder basically makes a purchase, the merchant basically accepts the card for the payment. The merchant completes a standard form called the charge slip or the sales draft. Clear? So what the merchant basically do? Further to basically the merchant completes a standard form called the charge slip or the sales draft. It will be in a 3 copies. Clear? So 3 copies basically will be generated from the machine. The sales draft is filled by the merchant and the card holder signs a slip in acknowledgement of having receiving the goods and services. Clear? You can say that basically on that they will sign that I have availed that services or I have purchased that goods. Clear? So and I am liable to pay. Clear? All just they have to be mention all these things to be here so that they can easily verify later on if any problem arises. Further, 1 copy it is given to the card holder that they have spent that amount, and the second it is sent to the bank for payment, and the third it is retained by the merchant. So the merchant has an agreement basically with the bank which is called as the acquirer. Clear? Very, very important. This word that is the acquirer. Sometimes basically you will get these words in the examination. Clear? Basically who is called to be as the acquirer? Basically the merchant has an agreement basically with the bank. That bank it is called as the acquirer. Further, the acquiring bank basically pays the amount of the sales draft less its commission. Like we can say that there is 10,000 entry, so they will deduct their commission, like we can say that 0.5%, 0.5% or whatever that will be, and the remaining amount basically will be credited to the account of the merchant. Clear? So the acquiring bank basically pays the amount of the sales draft less its commission to the merchant establishment. And later the claims amount basically from the card issuing company. Clear? And how they will get the amount? Clear? How the bank basically will get the amount basically from the card issuing? They will raise their claim. That is this much amount basically we have paid. Now you have to pay this much amount to us. Clear? Now you have to pay basically this much amount to us. Clear? So in this way, basically this process, it is to be continuously going on here. Now move to the next one. What is floor limit? What is card limit? What are hot cards? Clear? Now these 3 points we have to understand. First one here, that is the floor limit. So the merchant establishment, clear? The merchant establishment, it is given some discretion to accept the cards in payment. Clear? The merchant establishment, basically it is given some discretion to accept the payment basically in card, to accept the cards basically in payment, subject to certain limits fixed by the acquirer. Clear? So the merchant establishment basically is given some discretion to accept the cards in payment, subject to certain limits basically fixed by the acquirer, like up to 50,000 or 40,000. So the floor limit, it is per transaction limit and varies from merchant to merchant. Clear? There is floor that is per transaction. Clear? That is you have to done this transaction up to this much limit. Clear? Single transaction basically up to this much limit. Clear? There is also limit on that. And presently, basically, they have also providing the facility that you have set all these limits basically in your mobile app. Clear? Basically, through where you are operating your credit card. Clear? All these facilities are to be provided presently these days by the financial institutions to their customers. Now we have to move to the next one here. Card limit. Clear? Like floor limit, there will be also card limit. So the card holder basically it is also given up a limit up to which he can spend. The amount spent basically it is billed to the card holder once in a month. And on the payment of the bill, the limit of the card basically it is to be automatically restored. Clear? On the payment of the bill, the limit of the card basically it is to be automatically restored here. Hot cards, hot listing. Clear? There hot cards we consider that, or hot listing, like sometimes basically you are lost your cards. Clear? So what do you have to do? You don't say that basically you have to close your cards. In the technical language, we can say that you have to hot list your card or block your card. So hot cards are those basically which are lost, stolen, or misplaced by the holder. Clear? So what are hot cards? Basically, hot cards are those which are to be lost, stolen, or misplaced by the holder. If the card holder defaults in payment of the dues to the bank, clear? If the card holder basically defaults in payment of the dues to the bank or often tries to exceed the card limit, then the issuer places it basically in the hot list and tries to retrieve the card. Clear? And tries to retrieve the card. Clear? So basically, hot cards are basically those which are lost, stolen, or misplaced by the holder. So if the card holder basically defaults in payment of the dues to the bank or often tries to exceed the card limit, then the issuer places basically it in the hot list and tries to retrieve the card. Clear? And what they will do basically and tries to retrieve the card. Clear? So these are the some important points which we have to be covered up to this much point. Now we have to move to the next one. Transaction process and chargeback. What are the meaning of all these things? So the transaction process. So the issuer basically it is required to send a statement of transaction at periodical intervals, calling upon the holder to pay the amount spent. Regularly, you will get basically monthly statements. The card holder basically it is generally given 2 weeks time to pay the amount. The amount basically it depends upon you. Clear? Whether you want to pay the full or basically some extent. Clear? Like we can say that 5% and the rest basically you will have to include in the next bill. So it depends upon you. Clear? So the amount can be paid in full or in part. If only part amount it is to be paid, the balance amount basically it is to be carried over to the next billing cycle. And the card holder basically it is charged interest for the rollover period. Clear? Basically the amount which you have not to be paid, the charge it is to be interest, the charge it is to be basically the interest it is to be basically charged on that. So the acquirer on receipt of the claim basically from the merchant verifies the sale draft form and if found prima facie in order, then pays the amount of the sale draft basically to the merchant. Clear? If everything it is to be fine, then basically pays the amount of the sales draft basically to the merchant less his commission. So the commission is basically, I earlier basically I say that basically 0.5%. It depends upon case to case. So the commission basically may range from 2 to 3.5%. Depending upon the competition basically among the acquirer. Clear, that is basically depending upon the competition basically among the acquirers. Further, basically, I will tell you basically there one word that is MDR, merchant discount rate. Clear, merchant discount rate. And I request to all of you kindly comment in the chat or in the comment section basically what is the meaning of the merchant discount rate. So the commission earned by the acquirer, it is called as the interchange. Sometime in the examination, basically, what is the meaning of interchange? You will get all these questions in the examination. Kindly remember that. What is the meaning of the interchange here? Basically, that is the commission earned by the acquirer. Basically, it is called as the interchange. The merchant basically in turn claims the amount. Clear, the merchant basically in turn claims the amount from the issuer. However, the commission earned, clear, basically, however, the commission earned by the acquirer, it is shared with the issuing bank. Clear, the merchant basically in turn claim the amount basically from the issuer. However, the commission earned basically by the acquirer, clear, the bank who pays the amount to the merchant. Clear, however, the commission earned basically by the acquirer basically it is shared with the issuing bank. The Visa and MasterCard basically fix the issuer proportion of the commission. Clear, they have also fixed clear how much amount they have to pay. While reimbursing the acquirer, the issuing bank basically will pay the acquirer less his portion of the commission. Clear, even basically when the issuing bank basically pays the amount to the acquiring bank, clear, they will pay only that much amount basically with, like basically they have to pay only that amount basically after deducting his commission. Clear, after deducting his commission. Okay, so this is the whole process how the transaction it is to be going on here. Clear, so this is the complete process. Now there is one word more comes out, that is to be chargebacks here. Clear, chargebacks here. So what is the meaning of that here, chargeback? So this refers to the transaction. Clear, chargeback basically what is that? Basically this refers to the transaction which are authorized by the acquirer. Clear, basically this refers to the transactions which are authorized by the acquirer but later disputed by the card holder. Clear, so this refers to the transaction basically which are authorized by the acquirer but later disputed by the card holder. So when the bank is satisfied, clear, but later disputed by the card holder that this transaction basically it is not genuine or this transaction basically it is failed. So when the bank is satisfied basically about the disputed amount, it claims back the amount basically from the acquirer who in turn recovers the amount from the merchant. Clear. Basically, if the bank is satisfied that this transaction it is not to be genuine. So first of all, they will recover the amount from the acquirer, and acquirer bank basically who they will recover the amount basically from where? Basically from the merchant. Clear, because they have paid to the merchant. Clear. So this refers to the transaction basically which are authorized by the acquirer but later disputed by the card holder. Clear, like basically they can say that just for the example purpose, like they are saying that basically they have swiped the ATM card basically 4 times in the machine by doing the transaction of 10,000 at each time. Later on, they will say that basically only 3 times the transaction basically will be successful, and the 4th time transaction basically it is not going to be successful. But the amount is to be deducted from the account, and it will not refunded basically within 24 hours as per the clear, as per the basically guidelines. Clear, or we can say that. So later on, what they will do, basically they will do a file a complaint, and the bank will issue a chargeback. Clear, raise a chargeback. Clear, whether the customer it is to be genuine or not. Clear, after all verifying all the details. Clear, they will take the decision. Clear, whether they have to refund the amount to the customer if the transaction basically it is not successful, and if the transaction it is to be successful, so they will cancel that complaint. Clear, or they will cancel that raise. Okay, now move to the next one. What are to be known as the debit card? Clear, debit card, just as you know the meaning, debit basically means that amount is to be deducted basically from your account. Clear, if there is no amount in the account, then debit card basically will not help you to pay basically to purchase anything. Clear, only basically when you have amount in your account, at that time basically debit card plays their role. So these cards just look like their counterpart credit cards and are processed as well as accepted by the merchants in the same way as the credit cards. The debit card basically it is a plastic card. All are to be comes under the plastic card used at the point of sales, clear POS, to make the payments generally basically for the small amounts and also for obtaining cash. The use of debit card basically it is like the use of the check. Clear? Like check it is also plays their role only basically when they have balance in their account. So the term basically debit it is generally associated with the deposit account. That is personal account. Clear? So the basic difference between a credit card and the debit card. Clear? So now just we have to understand what are the basic difference. Sometimes basically they will ask in the examination the question on the basis of that. So credit card, debit card. Clear? User assess his line of credit. Like whatever limit it is to be provided, they will utilize only up to that much amount. User assess his account. Clear? Whatever, how much amount basically they have in their account, it depends upon them. Clear? There is nothing any limit that if you have to use only up to 1 lakh in a month. Clear? Whatever amount you have in your account, you can use up to that much amount. Next one, utilizes up to the limit sanctioned to him, can utilize up to the available balance in his account. Clear? Here the user basically utilize his account, utilizing his credit of limit. Payment is made on a receipt of bill basically from the issuer and before the due date. Payment immediately by debit to his account. Customer may or may not have any account with the issuer. There is not any requirement like you have SB credit, SB cards, credit card. So for that, basically it is not necessary that you have to be account with the SBA. Clear? This is one of we can say that agency basically having tie-up with the SBA to distribute the credit cards. So customer may or may not have account with the issuer. Here, customer must maintain an account basically and also have to be balanced here. Payments are made from any other bank account. Clear? Here also that is payments are made basically from any other bank account. Payments are only from his account. Clear? Payment only from his account here. So these are some of the basic difference basically between the credit card and the debit card to be here. Now after that, we will move to the next point. Clear? And now after that, basically we will move to the next point. That is regarding the one question here. After that, I will discuss smart cards. So customer must maintain an account and the balance for use of which type of the card. Clear? Customer must maintain an account and also balance basically for the use of credit card, smart card, magnetic card, debit card. Please tell fast what will be the answer here. Clear? Customer must maintain an account and also balance basically for the use of credit card. No, this we have not discussed. This we have not discussed. So no idea. Option number D, that is the debit card. Clear? It seems to be easy here, but at the time of the examination, basically when we have lot of theory in our mind, so basically sometimes basically we are not even able to answer these questions. Clear? Like what is the meaning of the smart card? What is the meaning of the magnetic card? Clear? Now all these things I will discuss basically with all of you one by one now. Now we have to move to the next one that is to be known as the smart card here. So what are the smart cards? So smart cards basically are just like the plastic cards, just the size of the visiting card. It looks like other credit card, and only difference is it carries a chip. Clear? In the smart card there is a chip embedded it on the reverse below the magnetic strip. Clear? Presently there are no magnetic strip cards. Clear? Presently there is no magnetic strip cards. Okay, so basically and it carries a chip basically embedded it in on the reverse basically below the magnetic strip. Clear? On the reverse basically below the magnetic strip to be here. So what is the aim? The aim of the smart card technology basically it is to replace the multiple number of cards with one or two smart cards basically with the storable information. Clear? So what is the aim of the smart card technology basically is to replace the multiple number of cards basically with one or two smart cards with the storable information. Clear? Now we have to be discuss what are the types of the smart cards. Clear? Which they will ask in the examination. Clear? Sometimes basically they will ask basically which of the following it is the type, which type of card. Clear? Like they have stored value cards, magnetic strip cards, reloadable and disposable cards, and closed and open stored value cards. Clear? So all these are the types of the smart cards. Clear? Basically in the book also they have given some questions regarding that, which we will cover in the next session. Just basically for the understanding purpose, basically I am giving you idea what type of question basically they will ask in the examination on the basis of all these things. So now let's discuss. We have to cover one by one all these types of the smart cards. So stored value cards. Clear? First type here, that is the stored value cards. Stored value cards basically also known to be as the prepaid cards or the value added cards. These cards either have a magnetic strip. Clear? First of all, basically these cards are to be known as the prepaid cards or VAC, that is value added cards. These cards basically either have a magnetic strip or a computer chip. Clear? These cards basically either have a magnetic strip or a computer chip in which the value is stored. Clear? In which the value is stored, which is available to the holder. Clear? Basically in which the value is stored, basically which is available to the holder for access primarily at the tail location. Clear? Basically for access primarily at the tail location. So further, basically the consumer pays a bank or the provider of the card basically for the card loaded with the value. Clear? What they will do basically here, that is the consumer basically pays a bank or the provider of the card. Clear? The consumer basically pays a bank or the provider of the card for the card loaded basically with the value. The consumer takes the card basically to the various location and make the purchases. Clear? Already basically there is an amount in the card. Clear? The consumer pays a bank or the provider basically of the card and for the card loaded basically with the value. Clear? That is a recharging, like we can say that mobile recharge top up, like we can say that 100 rupees top up we have to done. So basically we can use rupees 100 for the calling purpose. Clear? Next one. So in payment, he inserts a card. Basically in payment, basically he inserts the card into the POS terminal, and if necessary, basically enters the personal identification number. Clear? And if necessary, basically enters the personal identification number. Funds are to be directly debited. Clear? Next one, that is funds are to be directly debited from the cards and transferred to the vendor's terminal. Clear? Basically funds are directly debited basically from the cards and transferred to the vendor's terminal. So merchant then can transfer the value. Clear? Further, what the merchant basically will do? Merchant basically then can transfer the value basically accumulated to their bank accounts by remote login as frequently as they choose. Clear? So what the merchant basically will do? Merchant basically then transfer the value accumulated to their bank accounts. Clear? Accumulated to their bank accounts by remote login as frequently as they choose. Clear? Basically as frequently as they choose. So that is regarding the stored value cards. Next one, that is the magnetic strip card. Clear? So magnetic strip card basically we can say that they are conventional. ATM cards, credit cards, debit cards all contain the magnetic strip on the reverse, basically where the information basically it is stored on the 4 tracks. Clear? So smart cards basically have the capacity. Clear? Because they have the chip under that, have the capacity basically to store lot more information than the magnetic strip cards, as well as to perform the calculation basically with the data. Clear? As well as to perform the calculation basically with the data. Clear? That basically comes under the magnetic strip card. Clear? So the conventional ATM cards basically they have the magnetic strip on the reverse. Clear? Presently the smart cards basically have the chip and they have also the capacity basically to store lot more information basically than the magnetic strip cards, and along that basically they have also as well as to perform the calculation basically with the data. Clear? As well as basically to perform the calculation with the data to be here. Okay, so in this session we have to discuss up to this much point another 2 types and the contactless smart card, what is CVV or CSC number, and RuPay cards. All these things we have to cover in the next session, along with the payment gateway and secure electronic transactions. SCT, what is the meaning of that? All these things we have to be covered in the next session. Clear? So kindly attend the sessions regularly. Okay, so I have left with 5 minutes, so I will cover these 2 points here. Reloadable and the disposable cards. Clear? Reloadable and the disposable cards. So reloadable cards basically are those in which once the value stored, once the stored value it is depleted or used, the value can be replenished by the consumer. Clear? Wait a minute. Reloadable cards basically are those in which once the stored value is depleted, the value can be replenished. Clear? That they can be recharged by the consumer through a special terminal or ATM. Like we can say that basically like you have metro cards in your hands. Clear? So you can recharge of rupees 500. Clear? When the that total amount it should be utilized, you can recharge again. Clear? Like this is the thing. Okay. So depleted, the value can be replenished basically by the consumer through a special terminal or ATM, either by paying cash or transferring amount basically from his account. So disposable cards basically generally come for specific value, and once the value basically it is exhausted, the card has to be discarded. Clear? And once the value basically it has to be exhausted, the card has to be discarded here. Clear? Next one, that is the open, closed and open store value cards. Clear? Like some cards basically are used at a specific place and some you can use at any place. Clear? So in a closed system, the value of the card can be used basically for the goods and services only in the specified location. Clear? Like we can say that basically this card it is only for that specific use. Like basically we can say that like metro card. Like for Delhi Metro, this is only used for the Delhi Metro here. Okay, so in a closed system, the value of the card basically can be used for the goods and services only on the specified locations, like mass transit system for food, photocopying, books, and vending items within a university campus. Clear? That is basically for the specific university. The most common example of the closed system cards are to be the phone cards, subway cards, etc. On the other side, basically in the open system, the cards of several issues are mutually acceptable. Clear? You can use at any other place also. Like during 1966 Olympics, 3 separate banks basically issue Visa cards, which were accepted by over 1,500 merchants. Clear? Such an open system basically has made the cards to be known as the electronic purse or the electronic wallet. Clear? Basically, the open cards, basically you can say that, or open system of the cards, it is to be also known as the electronic purse or electronic wallet. Clear? This is the another question you will find in the examination here. Okay. So in this session, we have to be cover up to this much one. Next session, basically, I have already tell you what we have to cover. Clear? So thanks to all of you for joining this session. Hope all of you are able to understand regarding the basic points, whatever we have covered till now. So thanks to all of you for joining this discussion.